This is Module 13C of Accounting 3110, and it continues our study of the master budgeting process in organizations. This particular module, we're going to take a look at an actual master budget, which will give you a good example for the budget that you will be working with in your budget Excel case in this course. So keep in mind, I'm going to be showing you the budgets of a company called Land and Company. You will be assigned a different company, but the process and the concepts related to preparing the case are going to be the same. So as we start today, I want to remind you that when we do a master budget, it always begins with the sales budget and ends with a set of pro forma statements. So as we walk through the budgets today, I want you to keep in mind the sequence of the budgets, and we'll be talking in each of the budgets about what we're going to call an input section. This is very critical when you develop a budget using Excel, that you isolate one part of the budget for what we would call inputs. And then in the body of the budget, you will use those inputs in formulas to calculate the correct budget numbers. The reason we do this way is because when companies profit plan or do their budgeting, they don't do it one time. They take their first run of numbers and prepare the budgets, and then they go back and they make changes that may be needed or as circumstances change. So the budget is going to be redone many times. And what's going to change would be those inputs. And so if we have isolated a section on the budget for the inputs, we don't have to go into every cell in the body of the budget and make changes, but we simply make the changes in the inputs, which will then change the outputs because we have exclusively used formulas throughout the budgets. So again, we'll start with a look at the sales budget, and we will conclude with a look at the pro forma statements. In other words, the statements that we would expect to prepare at the end of the budget year. The first budget in the whole process of doing a master budget, as you see, is the sales budget. And here's what I was talking about with the input section. These estimates could change, but a very large estimate here is what we expect to sell and the price we expect to sell this for. So again, these are the kinds of things that could be subject to change. And we want to make it easy to make those changes. These percentages could change as well. So we have the sales of product A41, which is one of our two products, by each quarter. We have the sales for product 2 by each quarter. And then we have total quarter sales. And on some budgets, it's handy to put what we'll call year-to-dates and watch the sales increase over time. Now, if I click through any of these cells that are in the body of the budget, you would see that we have formulas. So the only place I'm typing numbers would be in the input section, but in the body of the budget, if we looked inside these cells, there would be nothing but formulas. The next budget, which is our units budget, is the production budget. And we will take a look at it. Let's get back up to the top of it. Again, this is the input section. These are the kinds of things that might be subject to change. And if you look in the body of the production budget, you will see again that we're doing production for each type of product and then totaling it up. And this whole section, again, is all formulas. And you would see, for example, this line, which is sales in units. This is all coming in from our sales budget. The ending and beginning inventories are going to be referencing back to the inputs. Purchases budget. Here's our input section. We have to know how many gallons each product needs of each, or maybe gallons, it may be pounds, but how much quantity each product takes of each of these materials. So we have 3 materials. We have the cost of these materials, and then, as I was talking about, how many gallons or pounds are needed by each of the products. And we also have inventory levels over here. So these are the inputs, and when we come down below, we calculate the purchases for each of the materials, types of materials, X, Y, and Z, and then we give totals. Once again, the whole body of this budget is nothing but formulas, either pulling from a prior budget, such as the production budget, or pulling from this whole section up here called the input section. Direct labor, we'll take a look at it. It would follow next. And we will look at the top of it for the inputs. These, of course, tell us that this product takes 2 hours of labor. This product takes only 1, and here is our rate, our labor rate. And we would expect that could change throughout the budgeting process. So we're ready to make those changes, but in the body, again, these are all formulas. We look at labor required for each of the products, and then we simply add them together. And once again, this budget's showing year-to-date totals. The next budget is set up a little bit differently because this is utilizing our total cost formula. Total cost equals the fixed plus the variable times some cost driver. Our cost driver's unit is produced, so we have this many fixed cost per quarter. We've got to keep in mind that this is set up per quarter. So we'll have 188,000 fixed costs per quarter plus 560 per unit produced. So down in the body of our budget, we would simply be using the data from the inputs. And you'll notice that we are setting up a separate line for depreciation. This is going to be important later when we get to the cash budget because we won't want to include that on the cash budget. Same thing with SG&A. We have a new cost driver now. It's dollars of sales. This is our quarterly fixed cost, and this is our variable for SG&A. We simply use the cost formula and develop the quarterly totals, and then across the bottom we have year-to-dates. So this particular budget again makes use of our total cost formula. Now, when you do your own project, you will be given an individualized set of inputs. And whether you develop this input page or I provide it for you, you would want to use this to log in or type in all the information that I give you for your particular case. Every case is individual. So you would take that information and type in all this information, as you can see on the screen. One I want to draw attention to you for you is this thing about long-term debt. You are given the amount owed for the first, second, and third quarters. However, at the end of the third quarter, you're going to have a repayment of debt. And this is what you're seeing here. So what will happen is you will have the same amount of debt or principal of the loan for quarters 1, 2, 3. You will make a repayment of X amount at the end of the third quarter. And therefore, this fourth quarter, it will be a lower amount than you were seeing before for your principal because you've made a sizable repayment. When you enter your interest, remember you are given interest rates are expressed on an annual basis, and you are to put a quarterly. So you're going to have to divide your interest rate for this particular cell. You're going to have to divide by 4. Or, of course, the other option is to multiply by 3/12, but you want to log in here a quarterly rate of interest. Now, all of these inputs are going to lead to your cash budget. Your cash budget is set up in quarters, and each quarter ending becomes beginning. So you're given your very first quarter, and then whatever you get for ending is going to obviously come up here and become the beginning for the next period. Now, one thing extremely important, if you have done your input page correctly, and we just looked at a sample input page, when you do the formulas for the cash budget, you will be able to pull in all the information you need. You should not be typing anything but cell addresses used in formulas. For example, when you go to do your collections for your sales, let's go back to the inputs. You're going to have these percentages here. So we will be able to pull from these input cells and not be typing any numbers in your cash budget. So we have worked in an earlier module, 13B, on how to do collections and how to do purchases. When we look at the cash budget, we have direct labor. We can go straight back to the labor budget. But I do want to draw your attention to this area, because we have to watch out. We want to exclude depreciation when we look at these two items for disbursements, because recall, each of these two budgets includes depreciation each quarter, and we are doing a cash budget, so we have to exclude those because they're non-cash items. Now, your dividends are going to show up in the fourth quarter. Your loan repayments going to show up in the third quarter, and you will be given two different capital budget items, and it will tell you which quarters you will be making those kinds of purchases. Your interest payments will require a formula, of course, for principal times interest, and I have given you the estimated tax payments. So I believe this information will allow you to properly do the cash budget. Again, all formulas. Now let's go to the flow chart. And the flow chart is a very important part of this assignment for us, because it brings together a lot of things that we have done. I want you to notice again that this is a flow chart for the entire year. Even though we've been doing quarterly budgets, we're going to do the flow chart to represent the entire year. So as we go through this, I'd like to point out a couple of things that I think you'll find helpful to be able to prepare your own flow chart. I have given you beginning inventory, and I have a formula in that cell which you'll want to look at. It'll give you hints about how to do your ending. But let me just say this. When you do your ending materials, you have to look at your purchases budget and say, at the end of the fourth quarter, how many pounds or gallons do I have left? And what is the price of each of those? And simply add all of that up, and it will give you the correct amount for ending. When we do purchases, we're going to simply look at how to bring in the full amount of purchases for the year. Let's go back to your purchases budget. Your purchases budget says you purchase this much, $2,929,000 or $2,929,000 of materials during this year. So on the flow chart, that's a very easy number to find. You should note that when we do a budget, we don't worry about partial units because, again, we're just estimating inventory levels, so we certainly don't need to be estimating percents of completion. For that reason, you should put 0 in these two cells. So you can find your purchases, you can find your ending, and then this formula will allow you to move your materials. You've got a direct labor budget giving you these numbers. You've got an overhead budget giving you these numbers. Now let's move on. You can see how the costs are going to move through. But when you get to finished goods, and you will need to find the ending inventory. So I want to direct you to the bottom of the page. This is the cost to make 1 unit of product A41. This is the cost to make 1 unit of product B86. Now, to find ending inventory, it makes sense that we would simply find the ending inventory in units, and then we would multiply that by the cost per unit. So you're going to have to find this 2 times. You go back to your production budget and you can find the number of units you would have at the end of the 4th quarter. You would do this for product A, and then you would do the same thing for product B86. Find your ending units from the production budget and multiply by the cost per unit and add these together. Once you are able to find this, you know these costs are going to move over here. You'll be able to find your cost of goods sold with a formula. So as you complete this flowchart, the challenge is to properly evaluate your ending inventories. You'll find this one and you'll find this one. And again, direct materials relates to your purchasing budget, and your finished goods is going to relate to your production budget, helping you to find that ending inventory. Let's go now to the income statement. Of course, our sales comes from a sales budget. Our cost of goods sold is going to come in from the flow chart. Our SG&A, we have a budget for that. And again, this is for the whole year. Our interest expense was put on our cash budget, so we'll have 4 quarters of interest as well as 4 quarters of estimated tax. So these items we can pull straight from the cash budget. When we do our retained earnings statement, very easy. The only one that we need to talk about would be dividends, and you'll recall that it was on our cash budget that we entered dividends in the 4th quarter as a disbursement. When we do the balance sheet, we're talking about the cash that you see on your budget at the end of the year. When we talk about inventory, we're talking about your flow chart again. And what do you have in ending inventory? Because we're doing this balance sheet at the end of the budget year. Now, as we talk about the last 2 items, you're talking about, let's go to payables first. Payables is about what you still owe. And we've paid for everything as we went except for our purchases. So you need to check how many dollars of your purchases have you not yet paid for. And you'll go back to your 4th quarter, and there'll be some of those purchases that are not yet paid for, and this is what becomes your accounts payable. Let's look at accounts receivable. It's similar, although just a little bit more complicated because we were collecting our sales over 2 periods. So on accounts receivable, this relates to your sales. What sales are still not collected? This is what it's asking you. How many sales are not yet collected? And I'll give you a hint on that. You would have to go back to your third quarter and see which piece or pieces have not been collected. And remember, these were the credit parts, so you'll have to allow for that in your formula. Fourth quarter. Again, these would be the credit sales that aren't yet collected. What pieces are not yet collected? If you're thinking, why isn't she going back to the second quarter? Well, think about it. It takes us 3 quarters to collect. So if I sold something in the second quarter, I would collect second, third, and fourth quarter. So by the time I get to the end of the fourth quarter, there's nothing out there that has not been collected. So I hope these hints will help you to find these amounts. Again, this would be a partial balance sheet. Do not expect it to balance. It will not, because obviously I'm not including any OE here for you. So don't worry about that. This is indeed only a partial balance sheet. In conclusion, about our budget case that we'll be doing for this course, you'll be downloading a file which will contain the early budgets, the sales, the production, direct labor, purchases, factory overhead, and SG&A. The part that you'll be expected to complete would be a cash budget with the appropriate inputs, and you would again be given those inputs on an individualized basis. You would be expected to be able to complete the flow chart and the pro forma statements that came at the end. So as we talk about the project here just a tiny bit more, the thing that you should be aware of is that the purpose of this assignment is to give us a review of many things we've done in this class, and also to enhance or maybe for some of you develop some Excel skills that you didn't already have, or perhaps again you're just enhancing the skill base you already have in Excel. Whichever, the important thing to remember is that when we do a budget, a big master budget, or any other large project in Excel, it's very, very important to correctly design the spreadsheet so that you separate the inputs from the body of the budgets. Again, you should expect many changes from management as you prepare a profit plan or a master budget. And by doing this input approach, you'll be able to make changes very, very quickly.